Ladies and gentlemen, good day and welcome to Kriti Industry Q1 FY23 earnings conference call hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhatelia from Asian Market Securities Limited. Thank you, and over to you, sir.
Thanks, Lizelle. A very warm afternoon and welcome all to the Kriti Industries Limited first quarter FY23 earnings conference call hosted by Asian Market Securities Limited. From the management side, we have with us Mr. Shiv Singh Mehta, Chairman and Managing Director, and Ms. Vinita, Group CFO. I shall now hand over the call to Shiv Singh sir for his opening remarks, post which we shall begin the Q&A session. Over to you, sir. Thank you.
Thank you. Good afternoon, everyone, and welcome to the Q1 Financial Year 23 earning call for Kriti Industries. I hope you and all your family members are doing well, and I wish you all the best. Let me first brief you on quarter one. During this quarter, our operations were impacted by a major fire at our plant. Fire broke out on April 28th, and it immediately impacted our operations, resulting into direct loss of stocks and other assets valued at approximately 19 crores. The fire was brought under control without any casualties by valiant efforts of people at plant. But for this incident, we could have achieved better results during this quarter. During this period, our revenue grew by 19% and 17% as compared to Q1 last year, both in terms of value and in metric ton. We fell short of our estimations because of the limitations imposed. Also, due to the carried over raw material inventory, our results were significantly impacted. I foresee that we will see an impact on Q2 as well. PVC resin prices were at 141 rupees per kg on 1st April, which came down to 116 rupees per kg by 30th June. There is a further reduction of about rupees 20 during period thereafter. However, with price correction, good monsoon, we foresee good improvement in H2. As you may be aware, the company has already undertaken capex of rupees 30 crores for new capabilities, new capacities and product range, which will be available to the market for offering. We continue to increase our focus aggressively on building material and column business segments due to their non-cyclic nature and better value addition. Expanding in new market and geographies and new states is helping us to grow. Now, I hand over the call to our new CFO, Mrs. Vinita to give financial highlights.
Good afternoon, everyone. Let me take you through the key financial performance of our company. The operational income for the first quarter of financial year ending 2023 was around rupees 184 crores, which increased by about 19% year-on-year and about 15% quarter-on-quarter. There was an EBITDA loss for quarter of rupees 6 crore, while there was a net loss of around rupees 9 crores. Thank you. I would like to open up the floor for the questions.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, I just wanted to understand one thing from your end. Is that the demand for agri pipes, last 3 years have been pretty challenging. Despite the farmers seeing quite a bit increase in the crop prices and the farmer income also increasing, we haven't seen the demand for PVC pipe increasing. So, what has been the reason that third year in a row we are seeing lull demand?
Mr. Gupta, we are not able to hear you clearly.
So, third year in a row we are seeing the demand getting impacted significantly, and we also understand that the demand is yet to come back to the pre-COVID levels. So, what are the key reasons for such significant fall in demand for PVC pipes for agriculture purposes?
My assessment is that actually we were impacted in this quarter majorly by our fire, which constrained our capabilities to produce. Demand was certainly better than what we have projected. We have shown growth over last year and quarter to quarter, but it could have been significantly higher had we been able to operate appropriately and adequately. However, from a historical level where prices had reached, now the prices have come down to much more comfortable level, which are the historical comfort of the industry. With good monsoon and good realization of crops, everyone is quite bullish on the demand in H2, beginning September middle or October beginning. So we are seeing quite good growth. Everyone is expecting good growth in agriculture. In our traditional markets as well as in new markets, we see a positive anticipated demand.
Sure. Sir, if not for fire, if the fire incident wouldn't have happened, how much incremental metric ton volume you guys were projecting for this quarter?
For the last quarter?
Yeah.
We would have if you'll see, we had to carry on inventory on the raw material side because we could not convert. And had we converted that much of inventory, we would have definitely increased, say, about a significant 20-30% over what we have sold.
Sure. And that might have actually reduced your inventory loss as well?
Absolutely. This is where we are.
Sure. And sir, what would have been the inventory loss for this quarter because of fall in PVC prices?
We able to exactly calculate because there was a continuous decline, and your material which you book from overseas and other places keep arriving at different point in times, not exactly on date. But overall, it would be in excess of, I would say, anywhere between 17 to 20 crores.
Sure. Okay. And sir, we have now completed the CAPEX which is largely focused on building products, and we also have a team in place now. So on the building product side, how do you see the ramp up happening on the volume side?
You see, if you see our last quarter itself, In building product size, also we have grown in spite of production limitations to the extent of about, exact number, what is that? Building product is? 65%.
Sorry to interrupt, sir. There was a lot of disturbance all of a sudden.
I am saying in building product side, our growth in last quarter was almost 64-65%.
Sure. Okay.
Talking in metric tons.
Yeah.
Value-wise, it may be more even that.
Yeah. And how do you see the growth for building product segments in this financial year?
As we had projected earlier, we are expecting and trying to achieve our numbers, what we had projected at about 100 and odd crores, if I don't remember exactly just now, but we are trying to achieve those numbers.
Sure, 100 odd crore for the full financial year, FY22?
Yeah.
Okay, that will be a substantial jump compared to last year.
That will be substantial jump compared to last year.
Okay. Thank you, sir. Wish you all the best.
Thank you so much.
Thank you. The next question is from the line of Dwanal Desai from Total Capital. Please go ahead.
Hi, sir. Good afternoon. Sir, the first question is on the inventory loss. So you mentioned that it will be anywhere in the range of 17 to 20 crores. But if we look at some of the numbers of the other peers, the impact on the margin is there, but it is not as substantial as ours. So how should we look at it? Is it because of the only fire incident that we are getting this higher inventory loss, or do we need to kind of relook at our inventory stock up policy on that? How should we how do we look at that data point?
As I was saying, our sales numbers, as we had planned and actual, we lost almost 20 to 30% of sales opportunity. And obviously, when you plan your inventory, you have to plan 2 to 3 months in advance. In a business like ours, where we import a lot of material which we require. So obviously, this material kept coming to us, and we were not able to convert it into finished goods in time because of the constraints we had. And that's why we were not able to capitalize on the opportunity, as well as we had to incur inventory loss.
Okay. So, sir, going forward, so this keeping this fire incident aside, even in Q2, I think the PVC resin prices have fallen significantly from 1st of July onwards also, right? And then it has stabilized probably in last 10 to 15 days. So should we expect lower inventory losses than as compared to Q1?
Yes.
How should we look at that?
You see, there is a further fall of almost 20 rupees after end of quarter one. And obviously, we could not complete our production plans of Q1, so we had to carry forward inventory in Q2. So we would see some trading losses in Q2 as well. But going forward in H2, where we are seeing significant jump in demand, we are quite hopeful that we will be able to do a much better H2 as compared to H1.
Sir, the third question is related to the demand part. So I think in last 2-3 years, there were multiple challenges, but the monsoon has been good, the crop prices have been good, but the demand for agriculture pipe has remained subdued. And I mean, one of the things that has happened is that overall water levels and the water reservoir levels both have remained high. So is it one of the reasons why the demand for the agricultural pipes has remained low? And if the monsoon is good even this year, that may impact the demand for agricultural pipes?
No, generally what we have seen that if it's a good monsoon, the agriculture pipe demand also is good. So normally we expect a good demand with a good monsoon, because water levels and reservoirs, if they are full, there is every reason for people to have multiple crops and to irrigate their lands to the maximum acreage. Only one issue which remained was the prices of PVC, the basic raw material for PVC pipe was extremely historically high, which have corrected significantly in last 4 months. The prices have come down to more or less realistic levels, which is quite comfortable for general historical averages of PVC resin prices. So that is why everyone in industry is expecting 2-3 things to happen. One, mentality and acceptability at this price. Coming back of pent-up demand, which was always there, which was not consumed during pandemic level and times. Third, good commodity prices give available cash flow for a farmer to buy. So we are all anticipating good agri demand beginning H2 post rainy season.
Okay, sir. And the last question is on building products. So the 30 crore capex, I think, came on stream in April or May. So in terms of the product range and in terms of the distribution setup, are we kind of done with all the preparatory work and, are we on course to kind of capitalize on the capex that has been done?
Yes. As I told even in our last call that we have already been able to complete our required production capabilities and capacities. We have also augmented range and also our distribution into different geographies where we had planned has been put in place, and we have started initial work including sales and marketing and selling efforts in each of these areas.
Okay. Thank you. That's it from me.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Viraj from Equirus PMS. Please go ahead.
Yeah, hello sir. So just 2 or 3 questions. In terms of whatever people we had to hire in our building product segment, is that hiring complete, and is that cost part of the P&L already, or do we expect any more costs to come?
No, we have already hired, and that is already part of our P&L. Both sales and marketing efforts are on, so all are already factored in our P&L.
And with the number that you have projected of building products, it will then require a Herculean 30-40 crore, 40 plus crore quarterly run rate. Are we seeing that kind of traction for our building products already?
Yes, we are quite on track, and we are seeing that kind of ability for our sales team to generate those numbers.
Right. And sir, when you say that H2, and you made a comment to one of our earlier participants that H2 will be significantly better than H1. That is bound to happen, right? H1 is anyways going to be a very bad half year for us. But if we were to compare it to, let's say, H2 of FY20, and we did, let's say, in December 20, we did 220 crore sales. So let's say 2 years out, will it be like 270, 300 crore sales is what you're expecting? Because matching that or being better than H1 is essentially not a barometer for somebody like us.
No, I appreciate your point, absolutely. And we are certainly targeting better than what you have indicated.
Right, sir. Thank you so much, and I wish you all the best.
I need your good wishes all the more in the post whatever we have faced in last couple of months.
Thank you. Thank you, sir.
Thank you so much.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Karan Patelia from Asian Market Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. So just wanted your thoughts on the PVC pricing. You think we are almost at the bottom, or we see a good correction from here as well?
So generally, what we talk to our suppliers outside and here, everyone feels that we are towards the bottom end of the price curve, and from here there are less chances of any further movements downward, and we are seeing good growth in terms of demand in India particularly, and that is what everyone is hopeful on.
That's right. And correct to assume that the channel partners are sitting at a very low level inventory?
Will you repeat your question, please?
Is it correct to assume that the channel partners are sitting at a very low inventory levels?
Generally, in a falling market, the channel partners will keep their inventory towards the lower side. So we feel that channel partners would have inventories which are towards lower end of their normal average inventory levels.
Right. Yeah, operator, you can take the next participant. Thank you.
Thank you, sir. The next question is from the line of Viraj from Equidus PMS. Please go ahead.
Thank you once again. Sir, by what time do we expect our insurance claim to be settled? Sorry, I was not part of initial 4-5 minutes, so I might have missed that.
Actually, all surveys and everything has been done, assessments have been done, and final, including forensic audit and everything has been cleared. Now the papers are being given to the insurance company by the valuers of the loss, which they are likely to do it in the coming week for sure.
Okay. And what will be our inventory, because you said that Q2 is anyways a lean season. So what will be our inventory, so that if there is any further fall, how much inventory are we carrying at this point?
On the material side, we may be carrying raw material close to about 2,800 to 3,000 tons, approximately that much, on PVC side.
Okay. Thank you so much, sir.
Right.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Karan Bhatia from Asian Market Securities. Please go ahead. The next question is on the line of Karan Bhatia from Asian Market Securities. Please go ahead.
Yes, am I audible now?
Yes, sir. Please go ahead.
Yes, sir. Just wanted to understand from your side, how is the government spending on the infra projects like Nal Se Jal and other schemes? So are we seeing real pickup out there, or still it's time to go?
We have seen in last 1 or 2 months that EPC contractors who are holding these contracts are getting aggressive in terms of buying. They are actually, inquiry levels have gone up. They are talking regularly. So we feel that government is spending now.
And how is our exposure to the government projects?
We are not directly involved in government projects, but we are in contact with EPC contractors who in turn buy pipes from companies like us.
Right. Thank you. That's it from my end.
Thank you. The next question is on the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah. Thanks for the opportunity. Any broad idea on, can we expect the same quantum of inventory loss that we had in Q1 to be there in Q2 as well, or do you think it will go down now?
No, Q1 was a higher loss. Q2 we will have loss, but we will have to see it at the end of period that what was that quantum, because we definitely see a loss in Q2, as I have said. But I think it should be much lower than the Q1.
Sure. Okay, sir. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Rupesh Tatia from Intel Sense Capital. Please go ahead.
Hello, sir. Can you hear me?
Yeah, yes, I can.
Yeah. So this agricultural product revenue, 156 crore, can you give a split between Madhya Pradesh, Rajasthan, Maharashtra, and rest of the markets?
Let me see. You see, I cannot give you exact numbers, but overall, MP is our largest market. Maharashtra and Rajasthan are our second. Then would be maybe like UP, AP, which are our traditional markets. But now we have expanded in agriculture to Karnataka, which we have made a beginning. So there is not much quantities at the moment, but we have begun our presence there. So exact bifurcation wise, I would not have exact numbers right away, but generally speaking, MP still constitutes, I would say percentage wise about 40% around 35-40. Rajasthan maybe about 20-25%. 10 to 15% will be in between Maharashtra, or 20% Maharashtra, and rest in, of say, within 7-8-9% around.
So let's say by FY23 end this year, what kind of revenue contribution do you expect from, non-MP, non-Rajasthan, and then also for FY24 also?
So now the significant growth will come only from newer states, because MP, Rajasthan, we already command a market share which is difficult to increase beyond a point. So the newer growth will come from the new territories like Maharashtra, Gujarat, maybe UP, Karnataka or AP. These are the major markets where our growth will be witnessed.
So 40-50% kind of number we can expect next year from non-MP, non-Rajasthan?
40% to plus something what we are targeting and trying to work towards. We would have seen substantial growth in last quarter itself had we not got into this.
Okay. And with this 30 crore capex in building products, what is our new capacity? Previously, we were, I think, around 6,500 metric ton, something like that.
So it has gone up almost by 40% in terms of capacity.
So it is roughly now 10,000, 9 to 10,000 metric ton?
We have capacity.
Sorry?
Yes.
Okay, and we did roughly, I think, 750 metric ton in Q1. So we can maybe do 3,000, 3,500 metric ton in building products in FY23?
We are expecting that we should achieve those numbers now.
Okay. Actually, it should be even more, right? Because it's 15 crore for 750 and you're saying 100 crore. So roughly 6 times, right? So 6 times is 1,500, 4,500. So roughly 4,500 to 5,000 metric ton in building products we can expect by FY23 exit?
Yes, we should be around those numbers because we have projected about 130, 140 crores of sales. So that would be almost close to that number. You should see that.
And this building product capacity is all PVC, or there is some part CPVC, some other SDP, other. I mean, what is the broad capacity?
We have PVC, both for extrusion as well as molding.
No, I didn't follow that, sir. Sorry.
Both for PVC and CPVC, we have both extrusion and molding, both the capacities. We have installed both the capacities. For molding, because you have to make fittings as well as extruded pipes. So CPVC we are making fittings as well as pipes. So same is UPVC.
Okay.
Yeah.
Okay, sir. Those are my questions. Thank you.
Thank you. The next question is from the line of Rajesh Kumar Ravi from HDFC Securities. Please go ahead.
Yeah, hi, sir. If I have missed out, if you have made any comments on what sort of inventory losses we have seen in Q4 and even Q1 and even in Q4 numbers have been impacted, are quite subdued. So was it all about inventory gain losses in Q4 also?
Yes, we had shared last time in Q4 results also. And this Q1 we had a major fire. So that's why we could not convert our material into finished goods to sell, and the prices fell. So we have indicated an inventory loss between 70 to 20 crores in Q1 because of this fire.
17 to 20 crores is a huge one. But what sort of basis current prices, prices 92 rupees odd levels, what sort of, inventory losses are you furthest looking at in Q2?
Q2 we will have inventory loss, but I cannot give you exact numbers at the moment, but it will be lower than the Q1.
Okay, so when you say lower than Q1, so how should one look at the margins? EBITDA per kg is a negative 5 rupees in Q1.
By day-to-day pricing at which raw material is available, our EBITDA margin, generally we are seeing that margins are improving as per percentage. But overall, because of the trading position we have today, because of the not being able to consume our material in time, there is a erosion in value of stocks.
Okay, because if I exclude that inventory loss, the EBITDA margin appears close to 10-11 rupees a kg, 8% EBITDA margin. So right. I'm just trying to understand that in September quarter, is the positive EBITDA margin a possibility or
improve better than what we have been projecting earlier years? Because our fitting ratios with BP coming in and BP volume growing, overall EBITDA margins should look better and healthier.
Okay, any guidance? What sort of margins you're looking for FY23, 24?
Hello?
Yeah,
Hello?
Hello, am I audible?
Yeah, you are audible now. Okay. Yes.
So I'm asking for FY23, 24, do you have any EBITDA margin guidance?
No, as we are seeing our building material business growing and our column business growing, earlier our EBITDA margins used to be about 10-11%. Now we are targeting that they should grow towards 13%, 14% here on because fitting ratio changes with building product, and building product has better margin than agri. And our cyclical condition of business is also that way evened out more with BP being at 11-12 months business. So we certainly see EBITDA margins improving going H2 onwards.
Okay, so H2 onward you're looking at EBITDA margins of 13% plus. Is that understanding right?
Hello?
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 Yeah, am I audible?
Hello?
The management team, we are able to hear you. Please
Hello?
proceed.
Yeah, am I audible, moderator?
Yes, sir, you're audible. The management team, are you able to hear us?
Hello?
Ladies and gentlemen, we seem to have an issue with the management's line. Please stay connected while we try to sort out the issue. Ladies and gentlemen, thank you for patiently holding. We now have the lines of the management reconnected. Over to you, sir.
Yeah. Hi, sir. Am I audible?
Yeah, you are audible.
So what I'm asking is that historically, if I look at your margins, pre-COVID, they have hovered around 7%. Currently also your agri exposure remains high, 70% plus, which obviously you're working on the building material segment to improve that. And despite that, with a high agri exposure, you are still confident that you can deliver even in a medium term, like the second half of this financial 13% EBITDA margin. Is that understanding right?
Second half onwards, our EBITDA margins should improve, and we said that it will be above what we used to do is 10-11% earlier, should go up to 11, 12, 13% upwards.
And what revenue guidance you are projecting for FY23-24 on a consolidated basis, total basis?
Total year end, I mean, it's difficult to project with what kind of first quarter we have lost in terms of...
No, even FY23-24, any, do you have any long-term
we are certainly looking at least about 18 to 20% growth over this year with the kind of business network we have expanded into the new geographies and with the product portfolio now we offer.
And 2-3 years down the line, what sort of revenue mix you're looking at, agri, non-agri?
Agri and non-agri, the agri percentage will come down significantly to say about 65% of total business, and non-agri should be about 30 to 35% of total business.
But despite having such high exposure in the agri, you're still confident of having 13% EBITDA margin, right?
Yes, because fitting percentages and agri, we are now focusing more on building, along with the building product, we are focusing on column pipes, which are higher value added products, and where we are getting good traction in the market.
Okay, and fittings, what sort of revenue mix you're looking at? Percentage of total revenues?
In building product, the fitting portfolio is about 35% of total sales, while in agri it is about 7%, 6%, 8%, depending on the sizes and type of markets you are in.
Okay. Great, sir. Thank you. All the best.
Thank you.
Thank you. The next question is on the line of Keshav Garg from CCIPL. Please go ahead.
Sir, I wanted to understand that since we have been facing inventory gain in FY21 and inventory loss ever since, and which is far more than with what other industry players have been experiencing. So have we made any modifications in our inventory policy, and going ahead, since volatility now these days in all commodities is a way of life, so are you confident that we will be able to withstand our margins going forward?
You see, in the Q1, we had anticipated more sales, and we would have achieved those numbers had we not had this fire which hampered our capability to offer products in time. So going forward, we are very cautiously ensuring that our material balance is right, one. Number two, we are able to ensure that we are able to put our plant fully into production mode, which we have almost done after this fire episode. So we are confident that we should be able to service our market, and if market is continuously served, there is no reason of inventory losses. As such, the prices in the international market have gone down significantly, and we are seeing, as we have been told by most of our suppliers, that they are towards lower comfort side of the prices, with the already petroleum so high, rather these prices are, it's difficult that they'll go down any further.
Okay, sir. And sir, also wanted to understand that, sir, are we seeing any traction in our tank segment, overhead water tank?
Yes, we are seeing growth in tanks as well. Our sales numbers are showing improvement, significant improvement in terms of total water tank sales. But still it constitutes as a smaller portion of our total turnover.
So can you quantify exactly what kind of revenue we are doing on a quarterly basis?
So water tank total revenue on quarterly basis would be a small, say 5% of the total turnover as of today. Only with over period of time it should grow further, but our growth rate has been fairly aggressive there.
Sir, and this this product mix breakup that you gave, 30 to 35% building products and rest agri. So this you are hopeful of achieving by when?
It will be, I was asked year 23, 24 end. That is
okay, but FY24 end we will get to this product mix.
That's right.
Sir, and you also mentioned that in second quarter also we are expecting inventory loss. So will there be a loss on the net level also, or it will just hit our margins?
No, it will hit our margins. You see, if rains end early and we start liquidating our inventory fast, which is generally happens in end of August, rains end or first week of September, then there should not be a reason of a loss. There should be a positive cash generation. Only because of some carry forward inventory from Q1 to Q2, we may see some inventory loss, which should be cleared within this period of sales. Because the margins we are seeing are improving on day-to-day operational basis.
And so lastly, just wanted to understand that since this our building product revenue is starting from a low base, so maybe we can grow for a while. But considering the competition in the market and so many players have entered this market in the past 5-6 years, so how is the competitive intensity, and basically what is the unique proposition that we are offering in our product versus the competition?
You see, as far as we are concerned, our brand name is very well entrenched in the areas of our dominance, where we find it easy to introduce building material products under our brand. Number two, general feedback what we have got so far, that our product range and the quality of product is what is well accepted by the market. So with good distribution network, what we have, we are hopeful that we should be able to have better ability to manage our business in building material. Secondly, our focus is not on the urban, very large cities to begin with, because we are strong in urban or rural areas where we are already selling agriculture pipes, where our dealership distribution is also selling building material. They will be able to distribute our product and encash our brand value much better.
Okay, sir, got that. Thank you very much.
Thank you. The next question is on the line of Rajesh Kumar Ravi from HDFC Securities. Please go ahead.
Sir, what is this large other income about?
Large other income, 1 second.
3.2 crores.
One second, I'll just give you.
Sure.
There was one, we had one land which was taken for some expansion in near Pune. So once we had liquidated that asset of Pune last year, the small land was pending, which was cleared and sold. That was about 1 crore rupees income which we had received through that sale of land.
This is 1 crore income in this quarter, right? Q1.
Yeah.
And remaining 2 crore came in from?
Rest is from the interest income or some MEI, some import purchase licenses because of.
Why I'm asking, historically this number has been, in single digit millions.
That's
2 million,
right.
3 million, all of this.
Land
year, yes, 1 crore, and incentive is such a huge number this time. It's
1 point something. I don't have exact number. 1.4, 1.3. I don't have the exact number here. But it's towards 1 crore plus that income from land has come.
No, I'm just trying to understand this income which you're talking about, export incentive. Has it come in a lumpy fashion after many quarters in this quarter, or you would be booking that on an accrual basis?
No, this is on accrual basis, no? This is on accrual basis.
Accrual basis, but you would be registering it every quarter, na?
No, we are enough for consultation.
Actually, this figure is approximate 3 crores, right? And
yeah, 3 crore.
Breakup of this figure is profit on sale of land. That
This is 1.9, sorry.
1.9 crores. Then interest on FDR, that is approximate 0.6 crores. And purchase of MEIS license, which we have purchased for import, that is approximate 0.5 crores. So that is the breakup of total.
Okay. And what is the CWIP that was sitting on book March end? Is that totally capitalized?
Which?
Will you repeat the question?
14 crore CWIP at end of March quarter, which was there on books. Is that all been converted into capacity? The current expansion is over, and that this 14 crore is still sitting as CWIP, or it is all into property, plant, and equipment in this end of this quarter?
Please repeat again the question.
So end of March, there was your ongoing capex. The CWIP was 13.7 crores.
Right.
So is that totally, that is the project under commissioning. So what is the status? Is the current expansion, which your capacity increase, which has happened? That
will be capitalized in the month of August.
No, the current increased capacity, is it, the CWIP is relating to that only, or what is it?
No, that is part of current increased capacity, and the expansion will be completed in the month of August, and production will be commenced from the expanded capacity.
Okay. And what is the total cash outgo estimated for this financial year? You spent around 18 crores last financial year. How much capex would be spent this financial year?
I think this will be approximate 20 to 25 crores.
Okay. So there would be further increase in borrowing, because earnings obviously first 2 quarters.
From internal accruals.
Sorry?
That will be from internal accruals, sir.
No, because cash balance is around 14 crores on books March end. Okay. And you're looking at 20 crore of capex, and you'll have interest payments also. So, and given the first half, we are looking at negative numbers.
No. Actually, our inventory levels and our current asset levels are coming down, and definitely this additional capex will be from internal accrual, because this will be throughout the year, and definitely we are expecting cash inflows in our coming period.
Okay. So what I understand is the working capital is where you're looking to trim your working capital, and that will help you, release the internal accruals, and that would largely help you fund the ongoing capital, right?
Right.
Yeah. Great. Thank you. That's all from my end.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Karan Bhatelia for his closing comments.
Shiv Singh, any closing comments that you want to make?
Hello, will you repeat that? I couldn't get you clearly.
Shiv Singh, sir, any closing comments that you want to make?
I only want to say that we had gone through a difficult time because of this fire, but now we are ready. We have come out of that negative cycle, and we are looking forward to the coming second half with positive and optimistic view. And we need all your good wishes. Thank you.
Thank you. Ladies and gentlemen, on behalf of Asian Market Securities Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.